Hi there, welcome to my channel where I dive into fascinating economic trends and analyze their impact on society. In my undergrad studies, I studied microeconomics, but I didn't like it. I found the big picture focus of macroeconomics very interesting. In recent years, however, I have fallen in love with microeconomics. In particular, I'm fascinated by utility theory and its application to various problems in business and general human interactions. One other concept that I find interesting is the marginal propensity to consume, which has a very interesting application in fiscal policy. This is the subject of our discussion today. Before I continue, however, do visit our website where I curate news and publications from international financial organizations and world central banks. Topics cover a wide range of financial and economic issues that affect individual countries or the world economy. For instance, COVID-19, inflation, or the war in Ukraine. Please also subscribe to this channel and be informed whenever we publish a new video. So, what is the marginal propensity to consume? First, I must explain the word or concept of marginal as it relates to economics. Marginal means the next unit of whatever measurable thing you are considering. For example, the next dollar, or any unit of any currency, or the next unit of cost. In his excellent book, Pricing on Purpose, Ron Baker puts it this way, and I quote, "The value of anything depends on the margin. The margin is what happens next. Marginalism and the subjective theory of value, when combined, allow economists to explain much human behavior. Why are diamonds more expensive than water? Besides being abundant, water tends to be priced based on the marginal satisfaction of the last gallon consumed." The German economist Hermann Heinrich Gossen, who lived between 1810 and 1858, developed what is known as Gossen's law. The market price is always determined by what the last unit of a product is worth to people. The market price of water reflects the last uses of the good for the aggregate of all consumers of water. On the other hand, the marginal satisfaction of one more diamond tends to be very high. If water companies knew you were dehydrated in the desert, they would be able to charge a higher price for those first vital gallons consumed, and then gradually adjust the price downward to reflect the less valuable marginal gallons. Since they do not possess this information, the cost of doing so would be prohibitive. The aggregate market price for water tends to be based on its marginal value." End quote. In mathematical terms, you can visualize a tangent to a graph of a function, for example, a utility function or a cost function. The slope of this tangent is the instantaneous rate of change of y with respect to x. In calculus, this is also the derivative of the function. You may more practically think of marginal cost, marginal revenue, and marginal profit, which are the derivatives of the respective cost, revenue, and profit functions. So, with this background, marginal propensity to consume measures the propensity of an individual or household to consume the next dollar that they get. I should be saying the next dollar of income, but the reason I have chosen to say get will become clear presently. So, if you get the next dollar, how much of it do you spend? Of course, you may also calculate the marginal propensity to save, which measures how much you save of the next dollar you receive. Now, To an individual or household, you probably want to have a high propensity to save and a low propensity to consume. If this is the case, it helps the individual or household accumulate savings. To a government, however, the situation is a bit complex. Suppose a government faced with a severe economic downturn wants to assist its citizens survive the dire economic situation. Suppose also that the government wants to stimulate economic activity to get the economy going. An obvious solution to both problems is helicopter money or helicopter crop, that is, giving citizens checks. If households have a high marginal propensity to consume, then a high proportion of each dollar is going to be spent. And through another allied concept, the multiplier effect, the economy may be kick-started. So, with one policy action, the government can solve both problems. That is, alleviate economic hardship, while at the same time using household spending to get the economy going. That's it for today's video. I hope you found this analysis insightful. If you did, please like this video and don't forget to subscribe to our channel for more engaging content like this. As always, I appreciate your support. Thank you for watching, and until next time, stay curious and keep exploring the world of economics.